Joe Vitale, American Retirement Advisors with the Gradient Investments Weekly Market Update for the week ending February 19th, 2024. So the week in review markets were mixed last week as investors digested continued earnings reports along with inflation and retail sales data that were both worse than expectations. In the U.S., the S&P 500 and the NASDAQ both declined, but also are both still up 5% year to date. International stocks, both developed and emerging, were up for the week, but have underperformed the U.S. on a year-over-year basis, which is why we're not, yes, there's a piece we can go international, but there's still, we believe, more opportunities U.S. Upcoming economic releases, a relatively slow week, but the Federal Open Market Committee, the FOMC meeting, minutes will be released, which may provide greater insights into the Fed's thinking on interest rates. As of now, they're not going to be lowering them anytime soon with inflation so hot still. The market outlook with inflation data higher than expected last week, along with retail sales weaker than expected, there is some consternation that continued elevated prices are starting to affect the U.S. Really? Yeah. Consumers' willingness to ability to spend. We're seeing the inflation still here. We're actively monitoring these conditions, but we would caution that our one report does not make it a trend. Our expectations remain that inflation levels will continue to come down from the elevated levels in 2023, and that if the U.S. employment remains strong, the U.S. consumer will continue to spend. So the Core Select portfolio was rebalanced last week, including the rebalance that was addition. We added Salesforce in the portfolio as well as the sale of Extra Space Storage, so we got rid of that. So every quarter we rebalance portfolios. Stocks in the news, disappointment from two large companies in different industries gained headlines last week. Cisco, which is not in the Gradient portfolios, reported earnings and guidance that missed expectations and announced a layoff of over 4,000 jobs. And Deere, which is not owned in Gradient portfolios, reported quarterly results that beat expectations and guidance for fiscal 2024 was below expectations. So last week we saw the market went down, it was down 700 points in one day, but it ended at just over 500 points. Why? Because the inflation numbers are still hot. We want to see inflation come down. It didn't come down. You're still looking at the grocery store. Prices of food are still up 2.5% on the last month. So that's not where they want to see it. They're hoping that inflation goes down. Now, if they lower the interest rates, what's that going to cause? It's going to cause more spending, which is good, but what does that do? That keeps inflation elevated. So the Fed, before they reduce interest rates, are going to want to see that prices are starting to come down a little bit more. They actually want to see that the weakening before they drop the interest rates. So that's it. That concludes this week's market summary. Thank you so much for being part of the ARA family. If you'd like to reach us, give us a call at 855-756-5700 or reach out at aradvisorsinc.com. There's a lot of stuff we still remember. We're in 2024 right now, 2024, 2025. Two best tax years before that goes back to what it was before, so we're going to see taxes go back up. We would love to see things change and that they keep it in, but we just got to be proactive here. God bless you. We'll see you again next week.